Good afternoon. Dear listeners, welcome to Šiaulių bankas meeting with investors. I'm Emilia from Nasdaq Vilnius, and I'm delighted to be the moderator for today's event. We will start with a presentation from the management, which will be followed by the Q&A session. And as always, I encourage every one of you to ask questions during or after the presentation in the question box of your screen. With that said, I'm pleased to introduce today's presenters, the Chief Executive Officer, Vytautas Sinius, and Chief Financial Officer, Donatas Savickas. Dear guests, please, the floor is yours and good luck.
Good day, dear investors. Thank you for attending and listening to Šiaulių bankas webinar on the third quarter results. So let's get started with the third quarter result review. So the net profit generated during the third quarter, 16.3 million. So it's slightly above previous quarters. Just to remind, the first quarter was 12.4 and the second 15.5. So the total result stands at the level of 44.2 million euros for 9 months. And that's 29% more than the year ago for the same period of time. And the growth was generated among different revenue lines as well, lower provisions than the previous year, and also some one-offs also that contributed positively to the result of the bank. Also worth mentioning that the growth of portfolio and the financing momentum, which is nicely developing during this year, we see will also influence positively on the higher interest income in the nearest quarters as well. And also worth mentioning that during the last period, we were successfully raising new bonds and firstly making steps in international bond market, where we raised 75 million euros of the bonds. And another borrowing element is almost 500 million facility from the ECB. With a negative interest rate that would also positively will contribute for the revenue of the bank, even starting with this quarter, quarter number 4. Talking about the key performance indicators that you can see in the screen, we also in all of them above our initial targets for 21. So starting with the return on equity, slightly above 15%. So expectation that we need to stay in this range between initial target and the current level looking forwards for 21. The same with the cost-income ratio that stands close to 42%. And if we exclude insurance impact, it would be closer to 40%. Also a good result below our cost income target of 44.7 set at the beginning of the year. Capital adequacy ratio currently at 18.4. Again, expectation that we should stay in this range of our target and current level. And also worth mentioning that this capital adequacy ratio is without interim profit. With interim profit, the current level stands slightly above 20%. And one of the positive elements compared to our projections to our P&L cost of risk, which is much lower than were expected, and that stands at 0.1%. And the good thing that at least as of now, we don't see any major short-term negative impacts to our loan portfolio. The current development doesn't show that major concerns are in the nearest future for the credit development. So if we would move to the next slide on the macro and COVID situation update. So worth mentioning that Lithuanian economy continues to develop quite strongly with an estimated growth of 6% for the third quarter. And compared to the other Baltic states, so Lithuania GDP growth is above Latvia's and more or less in the same level as Estonia, starting evaluate from 2020. And Lithuania's, I would say, lower GDP volatility or change volatility provides more stable environment and more certainty for business investments and also consumer spending. Inflation, probably one of the bigger concerns, at least for the short term, and both post-pandemic increase in demand that is also reflected in different segments such as raw materials, electricity or services, has influence to that, as well as the supply issues and supply chain disruptions that recently went around the world. They also influenced the growth of inflation. But hopefully both of these elements are temporary, and despite that, still in the nearest future expectations of inflations are high. But on a medium term, there are tools and projections that inflation will go down. Talking about the COVID situation, as you can see in the graph, it's still, I would say, waning. And Lithuania's number of cases, I would say, rather high compared to the Europe, about 1,500 during the 14 days period. However, we do not see any stronger restrictions for vaccinated people, and with the possibilities passport, or the green passport as we call, the activities are rather free in the country. Let's move on to the loan portfolio dynamics. So first of all, we see rather good trend in 2021. Compared to the last year, we've seen rather jumping quarters, some with a growth, some with a decline, and 21 expressed with a rather clear trend of growth. And total loan portfolio grew in the third quarter by 7%, and from the beginning of the year we see 16% growth. So I would say another strong quarter for the new agreement signed. 285 million euros has been signed during the third quarter. I would say all financing sectors showed growth path, starting with corporate financing by 4% quarter on quarter, consumer financing by 2%, mortgages 13%, and other loans, including renovation, by 10%, violating quarterly growth. And talking about renovation, multi-apartment building modernization projects, we are actively working on establishment of investment platform. And the good news that interest for this platform from the investors is quite high, and we cooperated with a number of institutions to build it. And from the initial target of 200 million, the size of the fund has been increased to 275 million euros. And we're expecting that negotiations will be finalized shortly. And we expect, if everything is okay, to establish the fund at the end of 21 or beginning of the next year. Despite that, we are working on this investment platform. The renovation projects continues from the previous financing possibilities that the bank has. Also worth mentioning that we have rather flat yield on the portfolio. Despite the intensive growth, we maintain to keep the level of approximately 4.4% of the total portfolio. And that leads also to the important development that we continue to grow our market share in the lending products. So on overall level, our market share has grown by 40 basis points to 8.7%, evaluating the half-year information. So let's move and describe in more details particular areas of our financing. So let's start with the corporate financing. So the portfolio, as I mentioned, during the quarter grew 4% and 11% growth during the 9-month period by 115 million euros. And also positive thing that interest rates been able to grow during this period from 3.1% to 3.6%. And also, as already mentioned at the beginning, we have the strong development of corporate loan portfolio dynamics to compare to 2020. And the new business generators is almost 3 times bigger than the same period of last year. And again, on the market share, we have increase of the market share by almost 1 percentage points to close 14% for corporate financing portfolio in the market. If we move now to the mortgages and consumer financing. So the mortgage development continues strong both in the country and at Šiaulių bankas. We generate new loans compared to 2020 same period of 9 months almost twice. So that's still shows that we are on a strong growth path with the mortgages. And as previous quarter, we generate about 20% of a market share of new agreements. That also shows our strong franchise in the country and good relations with the clients generating the new volumes of the mortgages. And as a result of that, we've been able to continue increase our market share in mortgage business close to 4%. Yeah, probably that's the key information about mortgages. And if we touch consumer financing development, this element doesn't show that much growth compared to the mortgages. So portfolio remained rather flat with a slight growth of 2% during the third quarter and 3% from the beginning of the year. So we treat that as a rather small growth compared to the previous years, but the needs of the clients are not that strong. And as you can see, the market grew only by 1% in consumer financing. And the good thing that we still continue to keep rather strong interest rates above 10%. And for the fourth quarter, we would expect that the growth should come back. At least the signs of the first month shows that the consumer financing is back on a bit more faster growth than it was in the previous quarters. And also our market share slightly decreased since we're not active with some larger clients. So there's a small decline of market share by 0.2% to 11.4% of the current market share. So moving to the daily banking, again, in general, net fee and commission income grew by 6% compared to the 9-month results of 2020 and reached 12.8 million euros. I would say rather active card payments and shopping online allowed us to generate growth in payment services and account administration fees growth. However, cash operations are still lower than 2020, and there is no full recovery to the pre-pandemic levels of cash operations. But such type of income as security brokerage that grew rather significantly by 68% compared to the previous period of 9 months in 2020 allowed us to compensate some losses in other positions of our commission income. And more active usage of mobile application and internet bank. And also other remote channels allows us to serve more and more clients remotely, not through the physical network. Let's now move to the funding that will be presented by my colleague Donatas. So please, Donatas.
Okay, thank you, Vytautas. Good afternoon, ladies and gentlemen. Good afternoon, dear investors. So talking about funding, it's not a scarce commodity nowadays, and we see healthy growth of deposit, which is the main source of funding. And saying healthy growth, I mean that it's manageable, because too much deposits means money which is unused, and it costs for the bank. And during this quarter, bank increased the different sources for funding by issuing MREL eligible senior preferred bonds issue with a good interest rate for the bank. It's slightly above 1%, and also borrowed funds from ECB at the latest TLTRO operation. And that makes our deposit importance even less, and we continued the decrease of cost of such type of funding. TLTRO operation allows us to benefit from the extra bonuses which is bank will receive until 2022 mid. We will receive extra 0.5% bonus if we succeed achieve the lending targets set by this program. And as we are seeing it now, these targets for this year end will be reached, and that will affect our income line positively. And also MREL targets by making this 75 million euro issue. Also we in line with the targets set by until 2024, and that means that we will not need extra steps out of our schedule in order to reach final targets by the end of 2024. If we move forward about capital and risk management, we continue to see well capitalized bank. And as we mentioned earlier in our previous webinars, that allows us to think about more generous dividends for the year 2021 without making into danger our capital levels. Liquidity situation is also very good, and also it's a question not about risk management, but it's more about efficiency of funds allocation. And about dividends, no new instructions from ECB followed, and the old ones expired at the end of September this year. So we think that we will have no other instructions or recommendations on this in this respect. Yeah, we can move on capital. About loan portfolio quality, so it's strange enough that we live in the middle of pandemic crisis, but all indicators showing the quality of loan portfolio show improvement over the last few quarters, and provisions that we forecasted and what we are having this year shows that despite that pandemic is not over as it was anticipated in the beginning of this year, but it not affected, at least yet not affected portfolio quality. Whether it's temporary intermediary step before big problems for all sector, or whether it's steady situation, we will see. But now we see the good trends both in NPE loans and also in provisioning, and that allows us to get momentum from the favorable situation in the market, and to get rid of some bad assets that we had from the previous history of the bank activities. Yeah, that's we are running quick through our main presentation that will allow us to spend more time on question and answer. So talking about this dynamic of share price dynamics, we see increase, steady increase that probably follow the general trend, and capitalization increases as the share price increase, and also we are very happy that daily turnover of shares are also increased, and it exceeded 0.5 million euros per day. That allows us to be noticeable even for larger players and investors, because liquidity is scarce of liquidity is the main factor that does not allow to invest into shares. And yes, so target price that our analyst that follows Šiaulių Bankas share and they make forecast, it's slightly, how to say, it's outdated, and we expect that probably they will update them as we release these new figures for third quarter. But all these price levels that seems probably very optimistic for someone in the beginning of year, now we are reaching or exceeding them. we will see what will be next steps taken by Analyst that follows from professional point of view. Yeah, that's probably a short summary of main presentation, and we are ready for Q&A session.
Thank you very much for the presentation. And as now we proceed with the Q&A, I would like to remind all the attendees that you can send in your questions in the question box of your screen. So the first question that we received is as following. How will profits be distributed to investors, and will dividends be paid in 2022? Thank you.
Right. Since the period was quite interesting, I would say, from the dividend perspective due to the pandemic, we had some restriction in the previous or some recommendation not to pay significant dividends by ECB, and now they are lifted. So we are starting our internal discussions entering the fourth quarter of 2021. What could be the possible dividend payout? So we see possibility that the dividends for 21 should be proposed. We're still considering what should be the right amount in order to stay for us within our risk appetite and projecting our capital adequacy ratio perspective. So taking all that into account, we will come up during the nearest periods with the propositions that would need to be discussed, as I mentioned, both internally and also checked with the regulator. And then it will be presented. But the current level of our capital buffer shows that we are could consider dividends visibly above the minimum levels of our dividend policy.
Thank you very much for your explanation. And the next question would be as following. Could you please explain the source of the gain from derecognition of financial assets in amount of 4.2 million euros for the quarter? Thank you.
Yeah, I will take this question. Actually, as I mentioned in the main presentation, we use the opportunity that current market situation offers. And we get rid of some bad assets inherited from the past. Specifically, it was disposal of one subsidiary, Apželdinimas, that gave us in this profit line almost 1.9 million euros. And the remaining are the several disposal of several bad loans or collateral or sale of small portfolios, nothing very specific or extraordinary. So that's it. Probably the main part is half of this amount is sale of one subsidiary, and the remaining are several different names from the bank or group portfolio.
Thank you very much for your comment. And another question would be as following. How strongly is bank overcapitalized considering any midterm targets? Thank you.
We are in different locations. So Vytautas, will you take this or should I answer?
Please, Natas, you can take it.
So overcapitalization is, how to say, it depends on the steps what the bank can take and from the environment. So from our side, we agree that it's overcapitalized, and we are considering to propose high dividends for the consideration of managing bodies and finally for the shareholders meeting. But also this overcapitalization could disappear if situation will change drastically to the worst side, and we should be ready for that. Therefore, the decision should be well balanced. And also the third impact is the possible growth of the bank. So growing organically, the profits that we are generating are sufficient to maintain to give enough space for further growth of the bank. But if some opportunities for acquisition would appear, therefore the current capital could be, how to say, just enough or even not sufficient. Therefore, it's permanent discussions and decision making how to use the capital in the best way. So probably we will be in this process of finding the best solution in the next quarter, until the decision for the shareholders meeting regarding dividends will be offered for the voting.
Mm-hmm. Thank you very much for your answer. And another investor asks, if we check Estonian bank LHV, where main leaders of bank own more than 50% and do not sell, why should Šiaulių leaders own so little shares and mostly sell them once they get them? Thank you.
Well, I can answer that. I would say rather different banks from the historical perspective and from the shareholder structure. And Šiaulių bankas is now close to the 30 years anniversary, and some of the investors are from the very beginning of a bank's establishment. And there are some probably different intentions that some of them are willing to reduce their stakes, and time to time they do sell some stocks. Another explanation is, I would say, that some senior management receives variable part of salary in bank shares, and time to time they are selling those shares just to cash out. That's another, I would say, rather general practice to do that. So I don't see any major concerns to that, and most of the senior management, they're still holding the stocks, and some of them selling, some are not.
Thank you very much. Another question would be, although you claim that the bank maintains a stable rate of new loans, it can be seen that the interest rate is slowly declining. What are your forecasts for interest rates in the future, and how will this affect banks' profits in the future? Thank you very much for your answer.
Well, talking about interest rates, so historically we used to have rather nice premium above of average market interest rates of other banks, and still I would say we maintain strong buffer of our current yields on the portfolio. For instance, as were presented in the presentation on a corporate financing portfolio, our yield even has grown from the beginning of 2020 first quarter compared to the for this year third quarter. It has grown by 20 basis points from 3.6 to 3.8%. And of course, the structural changes of the portfolio, where the mortgage portfolio is growing faster than the rest of the portfolio, and knowing that interest rates of mortgages are smaller compared to the other positions, that makes some dilution of overall portfolio interest rate. But it doesn't mean that it negatively impacts return on equity, since some of the positions like mortgages require less capital than the other loans. So overall, I would say Šiaulių bankas, despite the competition in the market, maintains good mix of product and pricing level. And despite that we are new player in the mortgage market, we achieve our growth not through aggressive pricing strategy, but more through our closeness to the clients and ability to compete with other measures than the pricing. So overall, I would say that there's no major elements that would impact substantially the pricing levels in the nearest future. One potential for the bank to generate more revenue is possible changes in the base interest rates that are still not happening, and probably not. The question is not for the nearest quarters, but probably of the years. But once that happened, potentially the bank could generate, as a whole banking industry, could generate higher revenues in the higher base rate situations. So there's still a bit more like additional potential for generate revenues than the current situation when the base rate's zero or negative.
Thank you very much for your explanation. We are still receiving quite a lot of questions, and the next one would be as following. Do you have set any targets or goals for insurance business? Thank you.
Okay, I also can take that. So life insurance is one of our business lines. It's a rather small company compared to the larger players, but continuously growing our market share in this business. So we are close to 4% market share in that, and the last sales showing higher growth than the market does. And I would say our goals is to extract as much synergies as we can from our group's perspective, talking about the branch network, talking about the cross-selling of the product through the bank networks, and also integrating the life insurance products with the other products like a consumer financing that we successfully do for quite a while, and they recently started to provide the service together with the mortgage loans, and that also shows good results of sale of life insurance with a mortgage loan. And as well, we shortly will start to sell the life insurance products itself through the branch network. So it's additional commission income for Šiaulių bankas group, and we see the potential of cooperating with life insurance business company through the bank franchise. So yeah, that's the one of the commission incomes for the bank.
Thank you very much for the explanation. Another question would be, what is the average loan to value on new mortgages issued in Q3? How does this compare to historical averages? Thank you.
Yeah, so it's a bit more detailed question. So probably to have a more detailed answer, we would need to look deeper to that. But what is the average loan to value on the new mortgages issued? So mainly we are following the concept of by providing loans to private individuals, we ask at least 15% of clients' money to pay for the project financing, and the rest is financed by the bank. and if it's a second house acquired, then the down payment is 30%. So that's the current practice with Šiaulių bankas and most of the other bank players. So that would be answer in general, but you know, on a portfolio level, those figures could differ, but the general approach would be the one I've mentioned.
Thank you very much. And could you please comment on what is your current thinking about share buybacks versus dividends?
Okay, so there could be different opinions even among management team of Šiaulių bankas, but if I represent one of the opinions, so I would say we prefer dividends versus share buybacks due to probably more simple implementation and easy to understand for everybody when compared to buybacks. But while we reach the decision for regarding how to distribute extra capital that we are having right now, so we will definitely consider both options.
Thank you very much. Another question would be, is the process of searching of new strategic alternatives for the bank still ongoing, or is the contract with Wood terminated? Thank you.
Yeah, so the strategic alternative review is not active at the moment. We're not actively working on that, despite our cooperation with Wood is not terminated. We're keeping time to time our discussions on the situation with the market. But as of now, there is no messages that we can provide to the market. And as we mentioned previously, if we would have any news on that, we will come up to the market and announce
them. Thank you very much. Another question that we received is as following. Are there more bad assets that could be sold in near future? If yes, could it be the same size as we saw in this quarter? Thank you.
For the first half of this question, I could say that yes, that could be more bad assets that could be sold in the near future, because we are permanent in the process of trying to get rid of the bad loans or collaterals taken over from that loans. But regarding the size of this, it's difficult to predict, especially having in mind that in the beginning of this year, we also, despite that we put efforts to get best result from this bad assets that we sold in the third quarter, so we were not sure, and that was how to say good combination of our efforts and the favorable market situation. So I think that even if we have good results from the sale of bad assets, that would be probably not the same size that it was in the third quarter of this year.
Thank you very much. Could you please explain how much capital you need to keep for your growth? And can you comment how much capital above internally generated capital each year to support your growth? Thank you.
It's difficult for me to catch the meaning of this question, but how much capital we need to keep our growth? So it depends on the growth rate, and when we look backwards to the profit level that we generating last few years, it was in the range of 15 of return on equity. So it was more than sufficient to keep our current growth rate. And if we predict that we will continue to grow at the pace that we are growing in the last few years, and we will continue to generate profit in the range of 15 or similar figure or return on equity, that means that we have both we will satisfy the needs of bank growth, and also it will remaining profit could be distributed in the form of dividends. But I'm not sure that I get the full idea what was intended to ask. Sorry for that.
So in case you would like to get a clarification, please do not hesitate to write in the question box of your screen. And let's proceed. Another attendee says, hello, what part of the dividend is paid out of the profit according to the bank's payment policy? Thank you.
According bank's dividend policy, probably that was intended to be the question. So our dividend policy states that not less than 25% of profit it should be distributed in form of dividends if nothing unexpected occurs. So the last 2 years, this clause about unexpected events was valid due to the recommendation from ECB. But the formula that it is that staying not less than 25% allows us to go above this figure, and it will not contradict our dividend policy.
Thank you very much. Another question would be as following. What is your own estimate for Lithuanian loan market growth for 2022, and maybe separately for corporate and private segments? Thank you.
Yeah, the good question, and probably it's not an easy to answer, and then more detailed evaluation is needed. So it's a bit more gut feeling. So yeah, it's pretty different trends in the previous period when the mortgages were growing quite intensively. We have about 10% growth if we evaluate half-year results in Lithuania 21 compared to the 20, and the different trend with the corporate financing when the growth was negative or the loan portfolio decreased by 4% when we calculate on a 12-month basis, again on the basis of half-year results. So there were quite different trends previously, but currently I see that both mortgages and corporate lending could show the growth. Also not talking about 2022, but the rest of the year. And most likely corporate financing will finish this year positively, despite, as I mentioned, that there was a negative growth for the half year. And talking about corporate financing, I would see that in 22 there could be growth, probably not extremely large, but you know, rather decent. Probably again guesstimate maybe 4 or 5%, since the base would grow for 21 due to the current development. And the mortgages also, I would say, if there nothing systemic happens in the market, the growth still could be, but probably in much slower pace than the currently, due to some signals in central bank rhetorics and some additional buffers intentions to establish for mortgage business. Also situation with the new projects that are not developing as fast as probably demand would love to, and the number of clients, they are not getting what they want from the supply point of view. So those elements, and also the strong base of a growth of 21, will be the challenge for mortgage business to demonstrate the same strong development next year. But still, I'm optimistic that that the needs of new dwellings and new housing acquisitions, they will continue to be visible in the market. And also, I would expect that growth of consumer financing will come higher than it was or is in 2021.
Thank you very much. We're still receiving quite a few questions, so let's continue. The next one would be as following. Does the latest fundraising through TLTRO mean Šiaulių bankas could generate around 6 million of interest income from that funding during 2022? Thank you.
I assume that the person who asked this question made simple calculations, 1% multiplied by the total amount that we borrowed from that program, and that would be not precisely correct because we have the time gap from the end of 2021 until middle of 2022. During which period we will receive extra 0.5% to the cost that we actually borrow at minus 0.5, and we will receive extra 0.5% for that period from mid of this year until mid of next year, and that makes this total positive impact more than twice less, and this positive effect will be distributed between 2 years, this year and next year. So yes, we will have extra impact on our profit, but it will be not on that size that is in the question, and also will be split it into 2 years.
Thank you very much for your explanation. Another question that we received is as following. Do you expect more gains on one-offs in near future? Because 4 million euros in Q3 21 and 3 million euros in Q2 21 add up to quite a bit, and excluding these one-offs, the bottom line year to date would be lower year on year, correct?
Yeah, so it's a continuation of a question I previously answered. So in the near future, we expect other gains also from the sale of bad loans will happen, but probably the most realistic assumption would be that the size of these one-offs would be smaller. But as I informed just in previous questions, so these one-offs happens in different situations, and this TLTRO bonus that we will receive from that also could be considered as an one-offs. But time after time, quarter by quarter, we receive different one-offs. So I not exclude that one-offs will happen again, but not necessarily that from the sale of bad assets.
Thank you very much. And could you please explain what caused abnormally high other income besides the sale of one of the subsidiaries? Thank you.
It's again probably about the same question. So out of 4.2 million other income, we had from the sale of subsidiary 1.8, the remaining for different sale of different bad loans and portfolios. So this is the explanation, but I hope that I answered during the previous questions.
Thank you very much. And could you please comment, is the current cost-income ratio sustainable in the next few years perspective, please?
Right. Talking about cost-income ratio, it is one of our key parameters that we closely observe and evaluate how it will develop depending on our decisions and the market developments. So definitely we are happy with our previous years, and I would say for the pretty long period of time of achievement working with this ratio and managing our income development and cost management. So it will continue to be of our focus. It's hard to predict for 2 years period how we'll be managing to keep the current level, but on our target we keep our 45% level that the cost income should be below this ratio, this percentage. And I see rather high probability that we can be below this level, despite that the pressure both from the cost side is quite strong, and it was already for a number of years, especially the previous period of year or so, when we need to additionally invest into our risk management functions, knowing that we are now directly supervised by the ECB and the standards are much higher than historically were for the smaller banks. As a systemically supervised bank, we need extra costs to invest into the particular lines needed to be efficient in this level. So those costs are, most of them are done. Of course, there are still some areas where we extra investing into the risk management compliance and related. On the as well IT infrastructure that also has strong growth during the last period of 2 to 3 years. They also not foreseeable that will continue in the same speed. So I would say from the cost side, the pressure will remain, but it's manageable, and the upside is possible from the continuous growth of income that we were demonstrating previous periods, and offsetting the growth of the cost and keeping the cost income level at rather competitive levels. So that's one of our targets, and we will follow that.
Thank you very much for the explanation. And it seems like we have one more question tonight, which is as following. You reduced the number of offices by 3 during Q3. Do you plan to close down more offices in upcoming quarters? And are you investing more into developments of online channels currently? Thank you.
So for the second part of the question, so definitely yes. So we have just recently upgraded our mobile banking application and the internet bank, and that's the continuous functionality improvements in those channels, as well as we strengthen our contact center. That is partly due to the pandemic, and also the changes of the client behavior also needed additional resources and technologies to act efficiently. So that will continue in 2022, the quality improvements in the remote channels. And talking about branches, so that's the continuous exercise that we observing what's happening constantly with the branch development, and once we see that the branches are not performing on a mid to long term perspective, we're closing them. And if we see that there is a possibility in some place to grow, either it's larger cities or some area which is still of interest to us, we renewing our branch and operating there. So there is no kind of clear targets how much to open or close. We see on the business perspective how the branch develops, and then decisions accordingly to the results are done.
Thank you very much. As all the questions are answered on behalf of Šiaulių bankas and Nasdaq Vilnius, thank you everyone. It was our pleasure being with you today. The recording of the presentation will be available in the Nasdaq Baltic YouTube channel. Have a good day, everyone, and goodbye.